Hey guys, camera's giving a little bit of an issue today, so just gonna start off recording straight away, looking into the charts. So what's going on here? Okay, so right now we have the 10 versus 2 year. So normally, whenever the 10 and 2 year gets inverted, there's a recession that happens shortly after, right? So right here, it's not when we're actually inverted, it's when we come out of the inversion that we normally have a recession. So what I wanted to talk about today, guys, is just seeing this. We have 2000, right? This is 2000 right here, and this is where the yield inverted and came out. So this was the top of the market, and then we came out, right? When we came out and the yield inverted, we continued to decline in the market, right? Same thing over here. So we started inverting, and then we started to decline again, right? So now we're over here in 2023, and the yield has inverted, but this is a bit different than what has played out in previous times, right? So sorry. What I mean to say is normally after we come out of the inversion, we have a recession. So currently, we have not actually exited this right here. We have not uninverted. And normally when we uninvert, our yield, the 10 and the 2 aren't inverted. After there's been an inversion, then we have a recession. So currently, as you can see here, we inverted in 2007, 2008, and then once the yield wasn't inverted, then we had the crash. Whereas here is as we were crashing. So it's very interesting because we inverted over here a bit, touched it a bit, and then the price, then we kind of had this price drop here as it kept pushing up. But then now, as the yields are crashing down and we are inverting, the S&P is going up. And so this is just a concern that I'm seeing, is that, like, hey, we haven't actually come back above here, and normally that's when the market actually drops more. Now, does this mean that, hey, we're gonna have, does this mean that we're going to have a recession, in the stock market? Do I still believe that, hey, the stock market is going to be having a recession? That's not what I'm saying at all. All I'm saying is we must consider this, because right now, as the S&P is looking, higher highs and higher lows, everything's looking good. We have the TLT. If we look at the TLT is pushing down, so it's making lower bases, lower highs, lower low areas. So this to me shows that, hey, we are actually going back risk on. But the S&P right now, versus the 10 versus 2 year, is showing that, once we do come, this could be 2 years from now. Who knows when it's going to be? This could be in 2024, 25, and then we invert, right? We uninvert, if that's what you want to say. So just something for us to keep in mind is that when that does happen, when we come out of the inversion, that's when price of the S&P does dump a lot more. So we could actually be in this bull market while this is underneath, and then have another recession or have a major pullback in the market as we cut the 10 versus 2 year gets back above zero, right? 10 versus 2 year, right? Or minus 2 year. So yeah, so that's just something to consider, guys. I mean, yeah, so if we look at even here, the 10 versus 2 year. Anytime we've gone under and bounced back above, this gray area shows a recession. Gone under, recession. This is 2006, 2007, recession. Boom. Okay, so just to keep that in mind. But how we're looking for the S&P structurally is very good. We have another resistance zone up here that we should definitely looking at for next. So it's definitely a great opportunity. We're looking for buys right here on the S&P. Yeah, so we're looking for our buys right here to take it further higher, right? So yeah, man, just wanted to point that out for you guys. If we look at the moving averages, let's see what the 50 and the 200 are. 50 and the 200. So are we above the 50? We're above the 50 day. And are we above the 200 day? Are we above the 200 day? Yeah, so we are above the 200 and the 50. We've had a golden cross here. So it's indicating to us that, hey, you know what? We're in a bull market, guys. I mean, we've been in a bull market. So nothing to stress about. I mean, we just keep heading higher and higher and higher. But like I said, once we break this area right here, once we break above this area, I think I believe that we're gonna have a melt up in a lot of risk on assets, stocks, commodities, cryptocurrencies, AI. So nothing you guys haven't really seen. This is great, but it's not like you guys haven't seen what potentially will happen. Just like the last bull run, right? We had this area right here in 2020, pullback, and then we had the price come above, but once it sustained itself above in November of 2020, once it sustained itself, the price, we had a melt up in all asset classes, right? And Bitcoin. So let's look at Bitcoin as well. That's exactly when Bitcoin started moving crazy too, right? New price scale. Okay. Right, so just in the same type of area, right? We had that melt up as well. So keep that in mind, guys, is that we are looking for the price to get to this level here, right? And have a melt up shortly after. So just like how we had in 2020, we're anticipating that for 2024. End of 23, first couple quarters of 24. And then again, we're looking at, just pull out our Brave New Coin Index here. You can see, that would coincide with the halving as well, right? The halving in 2024. All right, so that's really it for today, guys. I hope you enjoyed. I got to get the camera fixed, and once it's fixed, I'll definitely keep you guys, show my face again and give a nice intro. All right, so enjoy your day. Take care. Thank you.